The government shutdowns paused the release of all economic data, including last week's jobs report. We got upcoming inflation reports, obviously, that the Fed relies on to decide how to set monetary policy. That's also in jeopardy. Joining us now, former Boston Fed President Rosengren. And it's good to see you, Eric. And it's always kind of a rearview mirror that the Fed looks at, but not even, no one has a crystal ball. Fed always says that, so it's a difficult job to start with. When does it start getting where, if you don't have the rearview mirror, it even becomes more murky? When does that, is it already started by missing the jobs report, or it gets worse if we wouldn't get the inflation numbers?
Well, it's already a bit of a problem for the Fed, and the longer this lasts, the more of a problem it'll be. So it's not that there's no economic data, there's just no federal government economic data. So take not having an employment report. We do get initial claims, we do get the ADP report. They're both shown a weaker labor market. So they're going to have to rely on data that tends to be much noisier. So the ADP report is an indicator of payroll employment with people that actually use ADP, but it's not the same kind of sample that the Labor Department provides. So it's not that great for the Federal Reserve to have to be dealing with noisier data, but in circumstances like this, they really have no choice.
What do they get in terms of employment data points? They don't get the entire compiled BLS report, but you mentioned a couple of the things. Are there other things that they get that they know are going to go into the BLS number so that they really have a pretty good idea?
Well, they don't. I mean, so the unemployment report is two components, the payroll and the unemployment survey. So the unemployment survey is not available, so they don't have much on what the actual unemployment rate will be. For the payroll data, a combination of initial claims and the ADP report gives you a reasonable approximation of what you think payroll employment will be. But at times where a lot's going on, I mean, it's kind of like flying a plane and trying to land in fog, and all of a sudden all your instrument panel goes blank. It is just much more difficult, and you're more prone to make a mistake.
Yep. I mean, the survey data, it gets revised so much anyway. I mean, it's as good as we have, but it's not a great system, and the numbers have been falling on who responds and when they respond and everything else. But obviously, something along those lines is better than nothing. We can't read anything into the stock market, can we? The stock market seems to like the government shutdown. I mean, is the ostrich's head in the sand, doesn't want to hear about bad inflation? Is it? I mean, if there's no inflation numbers, you can't get any bad inflation numbers for the market.
Well, you can't get any bad inflation numbers, but people are aware that inflation has been sticky, and I think most consumers are expecting that stickiness is going to continue. So if you look at the core PCE that we did have before the shutdown, it was just a little bit under 3%, and I think it's quite likely that it trends up. But I do think that the stock market is at least in part reacting to an expectation of lower interest rates. And that is occurring regardless of the shutdown. The shutdown probably makes it somewhat more likely that the Fed, without really good data and worried about a labor market, and the ADP report was pretty weak, it's probably an environment where the Fed would probably ease by another 25 basis points. So I think that's more what the markets are reacting to than the government shutdown.
Hey, Eric, you were in charge of bank supervision for a while at the Federal Reserve. We are just hearing about this new deal coming out today with Comerica and Fifth Third planning on buying the company for over $10 billion. It's going to make them the 9th largest bank in the country after this deal. And as Leslie was just talking about this, the holdup in the past has been the regulatory oversight from the government. Do you think this is a deal that should happen?
Well, I think it's a deal that will happen, and I think it's a reflection of both the changed regulatory environment, but also there's an incentive for banks to merge and get economies of scale. And for what the analyst highlighted, I think is true of large regional bank mergers. So I think it's going to be an opportunity to see a lot more regional bank mergers over the next couple of years. as people try to get those economies. Things like AI are quite expensive to implement. You need a large IT department that is able to implement the advantages you can get from using your information. So I think this is just the beginning of seeing a wave of regional bank mergers.
Do you think it's a good idea, though? You said you think it is going to happen. Are you in favor of it?
I think you have to look at each case. The overlap between these two entities is not huge. So the competitive issues primarily are because there's a significant overlap. But the second issue is, are you concerned at all about financial stability over time? And are you getting more too big to fail institutions? So I think the bigger question is, as you get more and more larger regional banks, do you have the appropriate regulation, since those larger banks potentially, if they get into trouble, create a bigger problem for the economy overall?
Eric, do you think that even if the shutdown is short-lived, it could shave a couple of basis points off of GDP, I guess? So you think traders are thinking continuing cuts is even more likely if there's some economic effects to the slowdown?
Well, I think even more important than the shutdown is the fact that a number of government employees have taken the buyout, and that occurred as of the end of September. And so it's a little unclear how many of those people will be reemployed into the market. And it's a little bit unusual to have a shutdown in addition to threats of permanent layoffs. So the way people react when there are permanent layoffs also on the table may mean that you have people pull back more than they otherwise would. And it's not just government workers, it's also government contractors. So I think this uncertainty at a time when consumer confidence is already pretty low is a little bit dangerous and runs the potential of slowing down the economy more than we want.